You know, a lot of people still ask who qualifies for a mortgage modification in 2009. And it is absolutely dead simple for me to explain to you, and it's absolutely 100% predictable. Initially, lenders were strictly adhering to the 7 guidelines that I will explain to you when awarding modifications. Today, that's no longer true. They're now limiting their analysis to fewer and fewer of the original criteria because the workload has increased and the crisis has deepened. In fact, the range is so surprising it's somewhat inconsistent. It indicates to me that the rules are kind of being written on the fly, but virtually all lenders are using this cascading calculation whereby one set of calculation results are used in the subsequent calculation. Therefore, no one criterion is final. Rather, qualification depends on a combination of factors. The first one, far and away, is the most important, and that is your current ability to pay. It's your ability to meet the obligations of the modified loan. Customary underwriting criteria are used, so take like 55% of your gross monthly household income. That's a rough estimate of how much monthly debt payment the lender will allow you to have. That should become your target amount after modification. The debt-to-income ratio is the term that lenders use to describe this underwriting guideline. It is simply your total monthly debt payments, including cars, credit cards, student loans, other debts, divided by your gross monthly household income. The second criteria is the type of loan. 100% of negative amortizing adjustable rate mortgages, those neg-ams, 100% of those will be approved for modification to fixed rate loans. And almost no fixed rate loans with low rates, that is lower than 6% or so, will be modified. Everything in between is fair. The third factor is hardship. There are 6 commonly accepted hardships. The first is divorce, separation, loss of income, reduction in income, death of a spouse, co-borrower, family member, etc., illness, and military service. But let's face it, with this economic downturn, there are literally millions of Americans whose ability to meet monthly payments has diminished. So there's no shortage of hardship. The lender just needs to know how personally and specifically what your hardship is. Try to use one of those 6 if they fit, because those are the ones they accept day in and day out. The fourth factor is occupant, whether or not the home is owner-occupied. Now, owner-occupied are far and away the easiest. However, home equity loans on investment properties are being modified as well. The fifth one is the default status. Most guidelines are that the borrower must not have filed bankruptcy during the life of the loan, and a foreclosure sale must not be imminent, and that usually means like within the next 30 days. The guides also state that borrowers should be encouraged to apply even if they're not late on payments, but I got to tell you, in reality, applications from borrowers who are current on their loans aren't getting as good a modification offer, even with all the hype and all the announcements to the contrary. The sixth factor is the age of the loan. Really, any loan that is older than 9 months should be considered for a modification, and I've had lenders encourage me to remodify after as little as 4 months. And the last factor is your balance sheet strength, whether you have significant additional assets. This one is really only important if, in fact, the lender has recourse to sue you for some of the shortfall. For instance, if you had a home equity line of credit and the home is not your primary residence, so that really it's important for you to understand your own balance sheet so that you know how much liability you have. That first guideline that I talked to you about, your ability to make the new modified payment, is far and away the most important. Remember, it's going to be reviewed by an underwriter and he's going to apply standard criteria. So you just need to really be able to demonstrate that you can make these modified loan payments. Beyond that, make a strong case for at least one of the other 2 major guidelines, and you should have no trouble at all. For more information on loan modifications, hear about my story. I put it on a free CD for you, and you can get it at 60minuteloanmodification.com. It's called 60-Minute Loan Modification Secrets. Thanks.